today, I'd just like to first introduce our panel. We have Abigail Wolff, who's the Director of Critical Minerals Strategy at SAFE in the United States. Kim Dayun, who is the Senior Energy Analyst at the International Energy Agency in Paris. Natasha Jarbaska, who is the General Manager of the Newland Global Group in Australia. And also coming to us from Australia is John Coyne, who is the head of both the Northern Australia Strategic Policy Centre and also of the Strategic Policing and Law Enforcement section of the Australian Strategic Policy Institute in Canberra. Thanks so much for joining. I'd like to start off by each of our panel members introducing their thoughts on the topic, and then we'll have some discussion after that. So Abigail, over to you.
Thank you very much, Ryan. It's a pleasure to be here on the panel, and hello to my fellow panelists. I'll try to keep my introductory remarks here a little bit brief so that we can dive into the discussion, which I'm sure will be very fruitful and engaging. So as you mentioned, my name is Abigail Wolff. I'm the Director of Critical Mineral Strategy at SAFE, which formerly stood for Securing America's Future Energy. So SAFE started back in the early 2000s, really in response to the dependence that the United States faced for oil. And so we really saw the electrification of the transportation sector as being one of the key ways that we would wean ourselves off of this foreign dependence of oil and also off our dependence of OPEC manipulated oil markets. However, so in our attempt to do that and in our attempt to electrify, we've realized that in pivoting away from OPEC dependence on oil, that we've pivoted straight into Chinese dependence for critical minerals. So we've stood up this new Center for Critical Mineral Strategy to really examine the different economic, environmental, social, and national security implications of this dependence on critical minerals and try to figure out some ways that we can diversify our supply chains, which have really come under focus, especially during the coronavirus pandemic. So as I'm sure we're all aware, the world is increasingly electrifying. The United States, the EU, countries all over the world are beginning to implement different electrification targets for 2035 and 2050. Businesses also are beginning to follow suit. So this issue of electrification is happening. And the question is, how will we in the United States and among our allies still be able to compete in this increasingly electrifying world? We at SAFE are becoming increasingly concerned with the concentration of these new energy transition supply chains being predominantly dominated by China. So, and it's not just for the raw materials, but also for other key aspects among that supply chain, including minerals and materials processing, battery component production, and inevitably the high-tech manufacturing, innovation, and expertise that then flow from the ability to control those supply chains. So China has naturally very large concentrations of rare earths, but they're not as rich in things like lithium and cobalt, but they're still going out and strategically investing in other places around the world that do have those things. They own 8 of the 14 largest cobalt mines in the Democratic Republic of Congo, where we get 2/3 of our cobalt supplies. They're increasingly buying up lithium plays in South America, and these are things that we need to be keeping in mind as we're trying to diversify supply chains and making sure that we can all make sure that supply is responsibly meeting demand in this energy transition. The United States in particular is 100% import reliant on 13 of the 35 critical minerals deemed critical by the U.S. Department of the Interior. We're looking at that import reliance. We're looking at ways that we can ramp up not only domestic production, but also working with allies such as Australia, Canada, the EU, other places to secure those minerals as well. But again, as I said, it's not just the raw materials, the battery supply chain. China controls, the majority of anode, cathode, and electrolyte production as well. These guts of the batteries that are really necessary to get some of that innovation and intellectual property that come from the ability to control these supply chains as well. And at the end of the day, for this energy transition, Are we going to just be the assemblers of the future, or are we and our allies also going to be able to benefit from a lot of this innovation that is going on in this space? And at the end of the day, will we be able to have what we need for electric vehicles or even an F-35? So the mineral intensity of these things is growing, as I'm sure we'll hear from some of the other panelists here as well. And we really just think that the three reasons why this dependence is so bad, because we don't want to lose out on that economic opportunity, the jobs and innovation that flow from this energy transition. We don't want to be dependent on a strategic competitor that our military will depend on for a lot of the defense applications. In the United States in particular, our military can afford to be so small because we are technologically superior. We are technologically superior because a lot of the technologies and precision-guided munitions and things that we depend upon are built with critical minerals and rely on things like rare earth elements for their unique chemical and physical properties that make them so precise and helpful for our defense. And then also we see that our dependence is also inadvertently enabling environmental degradation and also human rights abuses as well. And we want to make sure that we are not inadvertently supporting these things that go against our inherently democratic ideals. So the problem, though, is that it's incredibly difficult to break in into the supply chain because of China's dominance. And so we see working with our allies, increasing transparency in the supply chain, and adhering to high environmental, social, and governance standards as being the way that we, India, and others can help to break into this supply chain and claw back key pieces of it to our shores and to our allies' shores. So I might wrap there. I look forward to the other speakers' comments, and thank you very much for the opportunity to participate.
Thanks so much, Abigail, and we'll come back to, I'm sure, many of those themes later on. I'd like to pass now to Kim Dae-yoon, who is going to speak from Paris for us.
Thank you, Ryan. It's a pleasure to be here and also have a discussion with the other great panelists. And just starting in 2020 and this year in 2021, the momentum for clean energy transition has never been higher, as many countries announced their pledges to reduce their emissions to net zero by sometime mid-century. But that raises questions about the supply of critical minerals as we shift from a fuel-centric energy system toward a mineral-intensive energy system. And in general, I think there's no shortage of resources in terms of absolute amount. But the question is about bringing these resources into production via investment. And there's no guarantee that supplies will be available at the right timing and the right prices when we need them. So this is why we are asking the policymakers to expand their horizons to incorporate this new aspect in the energy policy design. And over the past decade, we have seen some rapid reduction in the cost of clean energy technologies, from batteries to solar panels, and because of technology learnings and also the economies of scale. But the outcome of that reduction is now the raw materials, including minerals and metals, account for a larger portion of total cost of clean energy technologies. For example, the cathode materials in battery and the share of cathode materials in total battery pack cost was less than 5% some 5 years ago. But now it already reaches some 20%. That means any price spike or price fluctuations can have major impact on the cost of clean energy technologies, and in turn the investment requirement for energy transitions. This is why the IEA, as an energy agency, is paying attention to this topic about the critical minerals. And the bottom line is that the many countries, they have some ambitions to nurture their clean tech industry, clean tech manufacturing industry, as they advance the energy transition. But as they do, I think that there's some strong need to pay also attention to this topic of critical minerals and supply chain issues. So I will stop here, and then we can discuss later about more details. Thank you.
Thanks so much, David. I'm going to pause here and tell everyone that he actually is the author of a big report on this by the IEA. So we're very happy to have him here and grill him on page 62 in particular. But passing over now to Natasha Jarbaska, who'll be speaking from Australia, from Sydney.
Thank you, Ryan, and good morning, good afternoon, good evening, wherever you are in the world. Pleasure to be in such esteemed company. Now, sitting here in Australia, I could say that as a trading economy, Australia is highly exposed to external shocks, and something that has been more evident, especially in the last 18 months. The need for Australia to diversify its international partnerships, economic relationships, and deploying economic diplomacy in strategic areas, developing capabilities against economic coercion, and working in mini-lateral coalitions with like-minded partners, something that has been a very, very, I would say, essential components of our geo-economic toolkit, reflected through our engagements in Quad, Indo-Pacific Supply Chain Resilience Initiative, to name a few. So this geo-economic conundrum becomes all the more visible if we talk about the space of critical minerals with complex value chains, high levels of monopoly, distortive government interventions, and opaque markets. I work in the Australia-India space with an advisory firm here, the Newland Global Group, and our focus is primarily how do we simplify and strengthen trade and investment ties between Australia and India. So on this forum, I would not really miss the opportunity to elaborate more from the industry perspective on critical minerals and from an Australia-India context, what this really means when we talk about critical minerals engagement between both countries. Now, Australia's engagement with India in the resources sector has largely been led, I would say, by three main trends. First, the Australian resource exports to India, so particularly metallurgical coal, but also copper and gold. Now, that makes the bulk of our merchandise trade. Second is the Australian direct investment into mining tenements, leases in India, and Indian investment in Australian resource assets through partnerships, through business operations. And third, the competitive edge of the mining equipment and technology services. The Australian METS companies utilized primarily to modernize India's mining sector. Now, beyond these three core pillars of Australia-India resource engagement, both countries are now exploring ways to deepen their critical minerals engagement. Now, this emanated primarily from the Memorandum of Understanding, which was signed in June 2020 as part of the virtual summit because of COVID times. And this was also the time in June 2020 when Australia's bilateral relationship with India was elevated to a comprehensive strategic partnership, giving sufficient momentum to both these countries. So MOU on critical minerals, I would say, Ryan, has brought the political momentum that's needed for discussions, engagement on critical minerals between both countries, the technical and research-led discussion. What's really missing at this stage is still significant areas which needs very, very serious homework. Now, first and foremost is the lack of Indian public or private sector investment or commercial transactions in Australia's critical minerals space. Second is, unlike Southeast Asian nations or the European economies, and this observation is primarily from our interactions with the Australian corporates here. They have been very proactive in sourcing and securing critical mineral supplies from Australia. The Indian companies have been very slow, conservative. So India at this stage really needs to strongly recognize that it cannot really bring its coal or iron ore mentality to critical minerals market. This is a very, very different market, and you'll have to acknowledge the shift if we want to engage at a more proactive level. Uh, Third is that the Australia-India engagement in the critical mineral space will also depend on our ability to align our strengths, our complementarity. So that means aligning Australia's resource capacity, capabilities, its depth of experience in technology, regulation, operations, markets, sustainability, with India's manufacturing potential and the commercial-led innovation opportunities. So exploring a whole of value chain perspective that promotes the development of upstream extraction, midstream processing, and downstream manufacturing. Fourth, which again, String, you also work, and you deal directly with the Asian economies. You would know it in the best way that building relationships are our strategic assets when engaging with economies like India. And this becomes all the more important when we are looking at the evolving critical minerals partnership, which will depend on our awareness of each other's needs. So the buyer-supplier relationship is symbiotic, bespoke, and exclusive in the critical mineral sector and asks for an early, long-term commitment. And that cannot really happen if you don't really have strong relationship engagement with on both sides. Now, unless we address these factors, the commercial transaction gap, which I feel is deeply lacking at this stage, will continue to really create a void in the critical minerals engagement between Australia and India and further aggravate the pre-existing perceptions and assumptions of the India market among Australian companies, which is India is still not ready for business yet. So to quash these assumptions and notions, it's important that there's a more proactive engagement from the Indian side. So, I would say planning early, ahead, and swift is our best shot. And technology availability, risk appetite, access to capital are factors that will define our bilateral engagement in this space. And Indian companies must move faster if they are there to fulfill the Indian aspirations. And most importantly, progress must be measured on outcomes than on activity, because a lot of activities happen, but we need to focus, are the outcomes really coming through these engagements? So I'll stop here.
Thanks so much, Natasha. Passing now to John Coyne.
Thanks,
also in
Ron.
Australia. After you, mate.
No worries, thanks, mate. Look, good evening, everybody, or good morning, or good afternoon. Look, thank you very much for having me here. I'm a national security guy, so I'm probably the odd one out on the panel today in the sense that I've spent about 3 decades working in national security and in various intelligence agencies and other locations. I'm approaching the rare earth discussion today from a direction that touches on some of the speakers so far and what they've said, but I just want to put some things in very clear, very clear language, which is the way we understand it at the moment is somewhere between 60 and 80%, depending on how you calculate it, the value chains of rare earth elements are currently controlled by Chinese Communist Party owned or state owned entities. Now, that in itself, and that sort of monopoly would be problematic on its own if there was not already evidence that that control and power had been used in terms of economic coercion over the last decade. If we look to Japan, we've seen it very much in response to the South China Sea and a number of issues, a tightening and constricting of supply chains to Japan. And we saw a similar tightening and restriction of supply chains that in fact impacted on the Joint Strike Fighter program in the US. So this isn't really a hypothetical discussion over something we need to do. And I think that the other part about it is it's very much been amplified in terms of how quickly governments must move on this issue over the last 2 years with COVID-19. Now, first off is the realisation, first of all, if in terms of, and there's 2 of them really. The first one is the realisation that that supply chains and those traditional just-in-time supply chains started to break down over the last 2 years. Secondly, is that what we saw is that the very aggressive behaviour of the Chinese Communist Party over the last 18 months to 2 years in response to a range of issues, including the call for an international investigation into COVID-19 and its origins. So all those things joined together to really sort of reinforce to a number of different countries the importance of sovereignty, the importance of national resilience. Now, all of this has sort of coalesced, really. And what we've seen is a couple of really, in the national security environment, landmark decisions and announcements. So we've seen a return of the quadrilateral arrangement, which, we're seeing some progress. It had some stalling. It didn't look like getting up and running. And certainly we're seeing some real evidence of that. We saw the announcement recently of the AUKUS agreement, which is between the Australian, UK and US government, involving the transfer of technologies and a number of other investments. We've seen a ministerial meeting between the US and Australia where there was a reinforcement of that alliance or relationship. And all of these things have come together, and there's a realisation in Australia that in the current economic environment, the market is not going to solve the problem of these supply chains without interference. And I think one of the areas that certainly I'd like to discuss on this, which is what we're finding here in Australia, is that, monopoly that can be exercised by Chinese state-owned companies over the global supply chains makes competition hard. Raising equity in that environment where you've got a huge geopolitical risk is incredibly difficult. And so there's a lot of opportunities here, and where we see that is most definitely, from my perspective, from someone from an independent policy think tank, is that at the heart of this solution lies the quadrilateral. It relies on the Japan, US, India, and Australia working together to find a solution. And it's to find a solution that allows us to have resilient supply chains that cannot be coerced under certain circumstances by a increasingly assertive Chinese Communist Party. So I might leave it there. Thank you.
Thanks so much. This is a very rich base to start, so it's hard to sort of pick one person out. But I might go back first to Dayun, because he really raised a point that kept coming through all of our speakers, which is this idea of technological advances. I mean, you introduced it to us and you said there's no shortage of materials, but rather there's a, if I can paraphrase, a shortage of materials at the right price. But one of the things that kept coming up in Abigail's talk about strategic investment and how it's being done very tactically, Natasha talking about like the availability of technology, and then John talking about sort of how we can, different parts of, say, the Quad can work together, is it is based on a fairly sort of steady state of technology, when of course in all of these things what you're talking about that changes the relationship of whether you can buy it at the right price and make it available, it's very affected by technology and the geopolitical implications of that. I was wondering if you could start by maybe talking about what you see as these technological advances coming through, and I might throw to some of the other panel for how they see some of that affecting some of their comments on what they're interested in.
Yeah, sure. So in the report you mentioned, and we presented some 6 key areas of actions to ensure some reliable and also sustainable supply of critical minerals. And among that, there are some many aspects like the scaling of investment in diversified new sources of supply, and also the encouraging more recycling from spent batteries, solar panels, and also the mainstreaming the environmental and social standard. But one additional element which is often not discussed in the same weight is about role of technology innovation, in my view. Because in the past, there are many examples that technology innovation played a major role in reducing some market strains. And the scope for technology innovation can be both on the demand and supply side. On the demand side, technologies to reduce material intensity or enable the material substitution. So, for example, the use of silver and silicon in solar PV has declined by some 40 and 50% over the past decade, and that has enabled some spectacular growth in solar PV deployment in the past decade. And also, but the scope of technology innovation not is limited to the demand side. There's some huge scope of also supply side technology innovation. For example, the unlocking more volumes from the lower ore grade or the waste streams, or reducing some energy and water use to the production process. Some while back ago in 1970s, some emergence of solvent extraction and electrowinning technologies enabled some unlocking the huge amount of the oxide copper resources, and that resulted in some step increase in output. And also the US government is also some funding some new technology innovation to extract more rare earth element from the coal byproduct, for example. And so these kind of things can change the picture quite substantially. But in terms of timeline, some of the technologies may be coming near sight. So, for example, the battery chemistries, and we are seeing some new emergence of the LFP technologies, and also using the high manganese contents in the battery chemistries, and also there are some other technologies on site. But some technologies take some time to commercialize. For example, we are talking about all solid state batteries, which can change the picture of graphite and silicon demand quite a lot. And also, we are talking about induction motors to reduce rare earth consumption in the motors, and also the supply side technologies such as direct lithium extractions, or the extracting the metal recovery from waste streams. So these kind of things may take some time then. So it takes some 3 to 5 or even 7, 10 years. But still, I think the non-duality is crucial to support and step up effort for this kind of technology innovation, because we are likely to see some looming mismatch between the supply and demand going forward. Today, we are already seeing some slight market tightening, but this kind of tightening may become greater as we advance energy transition in the next 5 to 10 years. So still putting some effort for some tapping the potential of technology innovation is quite crucial. Even some of technologies take some longer time frame than what we expect. So yeah, I think this is the just one point I want to highlight alongside these other measures to scale investment and also the encourage recycling.
See, what is fascinating to me, thinking about Abigail's points on dependencies, or John on working together across an alliance, is innovation has not always been the easiest thing to coordinate across boundaries. And also, we've had a very sort of global commons approach to innovation for a very long time. So I was wondering if both of you would mind sort of jumping in from your different perspectives, US, Australia, also obviously dependencies and national security. And how do we balance this need for innovation and creativity? And that also comes with it, if you want to look at supply and demand side, of course, with cooperation in third-party countries that often are places that are very difficult operating environments for any country. I mean, how do you guys see the geopolitics and the geoeconomics of this? Like, how do we actually take it from an economic concept of boosting innovation and add the geo to it, do you think?
So I can dive in first. And I might also want to comment on what Taiwoon was talking about as well. But so from an innovation perspective, actually, in the United States, we invest a ton actually in research development, not so much in the demonstration and not so much in the manufacturing side. So what we want to really see, and what we're starting to see a little bit more of within major legislation that just passed in the US, the bipartisan infrastructure deal, is actually starting to make things here, because what you have is this, what they call the valley of death, right? We invest a lot in our university research, we invest a lot in our national labs. Taiwoon again mentioned our investments at the Department of Energy, trying to extract rare earth elements from coal waste and coal ash and all these different weird new streams of these critical minerals. But those are all at the bench scale and the laboratory scale. And what we really need to see is the ramping up of that at a much larger industrial scale, which we used to have in the United States, which was subsequently, GM used to have MagnaQuench, its permanent magnet production arm, which was, bought up by a Chinese company and completely moved over to China. Japan similarly has, I believe it was Hitachi, has their, permanent magnet producing arm as well. So we're missing that now. And it's part of, I think, the Chinese Communist Party major strategy for sucking up all of these raw material resources and most crucially, the processing side of these mineral resources as well. And maybe touching a bit on what you were talking about before, yes, the technology is rapidly changing. We're not sure which battery chemistry is ultimately going to win out. Right now it's, heavily lithium ion chemistry for light duty electric vehicles, but, we're trying to push incentives for the electrification of more niche industries to try to allow some of our more nascent domestic and allied battery producers to break in to these Chinese-dominated battery markets, whether it's, investing in electrified agricultural equipment or boats or, recreational equipment like ATVs. These kinds of battery chemistries will be a bit different, and some of these larger players won't really see the benefit in creating some, much smaller scale batteries, because, it just doesn't have, and I'm not an economist, so I apologize, but it doesn't have the same, market share as, some of these larger, lithium ion batteries for light duty vehicles. So it's not just so the technology will be changing, the innovation is there, but we're not ultimately building things. And also, as I think you mentioned, Ryan, it's not a level playing field that we're currently in right now. And we see that in China because, you know, they don't have the same environmental and labor regulations that we have, you know, among our countries of people speaking here. And also the incredibly subsidized government industries there. So, you know, even on the processing side, we've heard anecdotally that if we're investing billions of dollars, which we are here in the United States, again, in that infrastructure bill, the Department of Energy got $3 billion to create new battery material processing facilities here in the United States and to issue grants for those things. We've heard anecdotally from mineral processors that, you know, on an open market, that Chinese processors are paying above market price to make sure that raw materials are going to their processing facilities. So even if, you know, we're investing billions of dollars in creating processing facilities here in the US or, you know, in India or Australia or anywhere else, if you're a mine and a Chinese processing company is offering, you know, well above market price for your raw materials, you're most likely going to send it over there. So how can we be working together? I think, you know, that's the question we need to be asking ourselves. How can we be working together to make sure that there are the regulations or the trade deals or the pacts in place to make sure that when you have a country or a state actor like that doesn't really follow these conventional rules or can manipulate our free market tendencies, how can we work together to make sure that we too can compete and make the playing field a little more level?
See, I'm struck by how similar that is to what I took from John's comment before about how we work together. And what I think is very interesting is how you link that to sort of all levels of the supply chain part, as in what I took away from it is maybe that you feel at the moment we're too fragmented. John, is that sort of something you think that cooperation can deal with? Or is there always going to be inherently also a national security problem that, like, no matter how intermeshed we are and our values may be, the market dynamics that Abigail is talking about is very hard to go to a mine owner and be like, look, you know, mate,
Look,
a lot of money.
what I'm about to say, my back when I did an MBA, all my lecturers will scream as I say this, but I think the last 2 years have really shown something. We all assumed, and economically we assumed, that just-in-time supply chains, globalization, you know, a fixation on efficiency and effectiveness, and allowing the market to regulate was all heading in the right direction, and that the state was becoming less and less powerful, and that, you know, globalization and the market was becoming more and more powerful. I think in the last 2 years we've seen a complete reversal of that, and I think that we're increasingly seeing. So for those people who thought for a little while there, we thought that borders would no longer mean anything. Right now, across the globe, borders mean more than anything. That probably more so now than say 50 years ago. Um, and so I see that we're going through a change or a flux at the moment in terms of that. Now, some of us would like to have think, and if you speak to some of the big miners in Australia, as an example, some of the large company owners there will be turn around and will turn around and say they yearn to go back to the way things were. But I don't think geopolitically. So I don't think we're going to see a reversal of the Chinese Communist Party's the way they engage with the world is not going to change. And I don't think that COVID-19 is going anywhere. And so as a result of that, I see a real sort of decoupling from this, and there's some real value that has to be put into this. And what we're seeing now is decisions in the UK, decisions in the US, Canada, a range of countries, Australia, looking at our national resilience and saying, well, hold on a second here. There's a premium to be paid for this. And, you know, we need this national resilience, and just in supply chains can't be relied on for that. Now, you know, I see the alliance as a way to go forward on this. And in fact, I'm doubling down on my bet on that, because I'm trying to coordinate a 1.5 track with all 4 members of the Quadrilateral called the Darwin Dialogue to bring in a very functional way to discuss these sorts of issues, because I think it's critical. but there's a whole range of pieces to that puzzle. So there's a few that Abigail has touched on as well, which is that for me, one of the big sticking points here in Australia is to move down the value chain. To move down the value chain, there's the environmental impact. So we have to invest significantly more to look about how to make and how to refine and process these rare earth elements in a way that's less destructive. There's a reason why, for example, Malaysia shut down its processing plants. And there's a reason why China is allowing it to continue, or the Chinese Communist Party is allowing it to continue. So I just see a reversal of that, and I see that there's a real premium, and the answers Abigail said tonight really hits on this. There's a real premium to be paid for this, and unfortunately, it's the only way. The only way we will break that stranglehold on supply chain and on the market is by government intervention, and that can only come through an alliance approach. And I know in the past that that's very, very difficult, but I think if we look towards the pressure that's going on, certainly if you look towards the public statements that have come out from senior diplomatic officials in China, and you look at the Global Times for their comments on the Quad, there's a lot of concern from their side about how effective the Quad can be, and that is because it holds a great deal of promise, especially in areas like this.
Natasha, you spoke before about simplifying and boosting Australian-Indian trade and engagement, which seems right in this wheelhouse. But I also noted you said sort of there's a need for India to get over an either-or mentality when it engages. I mean, A, do you think that applies just to India and the Quad? And B, do you think that like the answer of this is this sort of like, having, how do we actually get around some of these problems and get this working together that John's talking about? But I mean, the same point, the sort of simplification of markets that you're talking about were based on principles that, as John said, as Abigail's talked about, economics has been talking about 50 years. I mean, do you think you need a new way to simplify this engagement? And what should sort of India, and I mean to a lesser extent Australia, actually do other than deal with the either or mentality that you talked about?
Sure, Ryan. I think that's a great question, which is generally asked when we talk about the Australia-India economic engagement, something that hasn't really picked up in last several years, and specifically when we compare this with Australia-China economic engagement. I strongly believe which is not really a very strong analogy, because the trade relationship, the investment relationship is very, very different. But coming back to your question, now we have to understand the nature of this economic relationship. Now within India, because it's a very consumption-led economy, there's always been an assumption that it will always remain insulated against external shocks, right? So the engagement has always been very committed to what really is going to reap us the dividends. So be it engaging at the global platform, engaging or not engaging on trade agreements, on RCEPs. So that's one component. But there's also a growing realization that we need to be part of these global supply chains if we want to convert ourselves into an export-led economy. When I say that, the government has set goals for manufacturing. There's a Make in India initiative. So there's also a strong aim to globalize your development agendas, to have more cooperation. And picking from John's point when he mentioned about decoupling, I think just as much decoupling and self-reliance talks have really picked up in the last 18 months of COVID. Simultaneously, there's also been talks about greater cooperation, greater alliances. So it's interesting to see how this analogy has shifted. They're both kind of thought processes which are currently dominating the market. Now, from the technology perspective, I'll answer both the questions of yours. But if I come back to Kim's point on technology, our experience in the Australian market has been that Australia currently is focusing on how it goes beyond mining and also enters the manufacturing space. Now, that means it's a very, very capital intensive industry. You need to put in a lot of money, and where the money will come from. And also technology. Now, intellectual property and technology transfer in the current scenario, which economies can contribute? Also, what can be a common driver for all these economies? I'm just thinking at a very ambitious level. I personally feel at this stage, net zero emissions can be a common driver for all these economies. If they can all come together and realize the goals that are currently, heavily stated across, can this be a reason of sharing technology or IP? Because we are all headed towards one goal of focusing on the renewable, on the battery vehicles, on electric vehicle market. Now, the second question on corporate engagement between Australia and India, there are several factors. First, of course, has been the whole story of perceptions. There's also a short-termism approach between Australia and India. What I mean by short-termism is quick results, a transactional approach, which has largely happened from the Australian corporate side. So India takes a lot of time. You need a lot of patience, a lot of perseverance, and I also say you cannot really say that the market isn't changing. You need to change your ways of engaging in this market, because there are a lot of European companies, there are a lot of companies from the US, German companies, French companies, which are doing very well in the India market. So there's something really, different or, not known, or there's a fear of unknown, I would say. There's this whole reputational risk, which many of the corporates say, about the difficulty in engaging this market. So from our perspective, I would say we need greater understanding of how to operate in the India market. The Australian corporates have to be more open to engagement. Look at it as a national engagement project. Just continue to engage. Don't hold on to your anecdotal assumptions and perceptions. If that answers your question, Ryan.
It does a splendid job of asking my question. I'm afraid that we've hit about 5 minutes left. And I note that one of the things on these panels is said that what are the main policy considerations for India and how should India approach its need for critical minerals? So rather than ask just for final comments, I think I'm going to ask you something a bit cheeky, which is if each of the panelists can be like, what is one thing that they think that Indian policymakers should consider and how that relates to their remarks? That should get us almost perfectly to the end of our session. And I've got to say, I've learned a lot. Thank you so much to our speakers. Abigail, do you want to go first?
I can kick us off. Yes, thank you, Ryan. So I might just put a very fine point on it and say that all of our countries, India included, we face the exact same problem, and that is the fact that we are overly reliant on the Chinese Communist Party for the energy, material, and manufacturing needs sort of the future right now. So I think what India can be doing is something that all of us need to be doing, and that is looking at, not only its own domestic supplies for things, looking to work with allies for supplies of things, and also making sure that we can share the innovation that we have, in the United States, but also around the world with others, so that we can diversify the supply chain and make sure that all parts of it, from processing to manufacturing, are also, implemented around the world, and that we are adhering to these high environmental, social, and governance standards, and using this transparency that we know, or at least think, that the Chinese Communist Party would not adhere to as well. So working together and adhering to those high standards, I think, is what India and the rest of the world really needs to be doing.
Tayun, other than read your brilliant report, which everyone should do you have a suggestion?
Yeah, I think it is difficult to pick one, so I will just briefly mention 4 items. The working with the like-minded countries, as Abigail mentioned, is critical because it can reduce the investment risk for producers. And also it can incentivize investment in new diversified sources of supply, and also can attach the higher environmental and social standard. That is one thing. And the another thing, the second point, is about mainstreaming higher the ESG standard. And I think there's some strong linkages between the security of supply and also the higher the environmental and social performance, because many of the investors and consumers are calling for the volumes that is sustainable and responsibly developed at the moment. But today's the largest major portion of the volume is coming from the region with either lower governance scores or higher emission intensity. So that means the environmental social performance don't rise, and consumers will need to compete for a small pool of supply, which can create another layers of market strength. So that is second one. The third element is, as the Abigail mentioned, I think it is critical to also to support the R&D spending on the late stage and demonstration pilot project rather than the early. Also, it is crucial to investment in R&D, early stage R&D, but also it is crucial to market diffusion, pilot, and demonstration stages. And the final thing is we mentioned about investment, recycling, ESG, but all these measures could take some time to have an impact. But in the short term, there could be some market strains in the short term. So it is also crucial to do some stress tests. But what if there are some disruptions in lithium market, rare earth market.
Sorry, mate. I'm going to have to cut you off just so I get let the other two have a quick speak. John, do you want to jump in? Sorry.
No worries. I'll try to keep it quick. The first one is I think the Indian policymakers should look very carefully at tech decoupling and the way that's occurring globally as an example of the change that's going on and what is actually possible. And I'm talking about 5G technology as a really good case study of that. Secondly, is my other piece of advice is never to let a good crisis go to waste. There's a habit in these environments because it takes so long in terms of miners and others to invest in this. There's a real movement forward because of COVID-19, whether you're in DC right now or whether you're in Canberra, whether you're in Tokyo. There's a real feeling going, okay, we need to make something go forward here. And I think that this is one of those times where speed is of the essence in this policy decisions. And I know sometimes for bureaucracies and policymakers, that's the devil to them. They don't want to engage with that sort of thing. But now is the time for this sort of bigger thought of how we can make these go forward. And there are countries that are relatively willing to make bold decisions, and by that certainly I would list the Japanese and the Americans right now, who've both been on the receiving end of significant economic pressure around the rare earth elements from the Chinese Communist Party. Now is the time to do something.
And Natasha, I'll leave the last word to you.
Thanks, Ryan. I would say quickly that, beyond the government-to-government engagements, because the institutional engagements of India currently when it comes to sourcing and securing critical minerals from outside is very G2G. It has to be given full autonomy to engage with private players. And that's where the key is that the government and industry needs to work together if it's really focusing on critical minerals. And critical minerals should be a big theme of engagement. At this stage, it's still lacking in the Indian space. Thank you.
Thank you so much, everybody, and thanks for a really wonderful panel. I really learned a lot. Thank you.